Economist Stephen Roach says the United States is facing a dollar collapse by the end of 2021 and a double-bottom recession of over 50%. Economist Stephen Roach told CNBC on Wednesday that the United States dollar could collapse by the end of 2021, and the economy expects a more than 50% chance of a double-bottom recession. U.S. economic output rose shortly, then fell in 8 of the last 11 business cycle improvements, Roach said. The current account deficit in the United States, which is the largest measure of international imbalance with the rest of the world, has suffered a record deterioration, he said. Roach had predicted a decline in June, when the dollar index was traded around 96. At that time, he said it would depreciate 35% against other major currencies in the next year or two. The apparently crazy idea that the US dollar would collapse against other major currencies in the post-epidemic global economy is no longer so crazy, economist Stephen Roach told CNBC's Trading Nation on Wednesday. Roach, former president of Morgan Stanley Asia, said he saw more than 50% probability of a double-bottom recession in the United States. He based this estimate on historical evidence and said that recovery in 8 of the last 11 business cycles increased economic output briefly and then declined. It's definitely something that happens more often than not, he said. Roach most recently predicted a dollar drop in June and said it will lose 35% in value against other major currencies in the next few years. At that time, the dollar index was trading around 96. On Thursday, the index was traded around 94.41. On Wednesday, he said he expected the crash to occur at the end of 2021, but did not say how much. We have received data that confirms both savings and current account dynamics much more dramatically than I was looking for, he said. Explaining his perspective, Roach pointed to the second quarter data. The current account deficit in the United States, the largest measure of international imbalance with the rest of the world, experienced a record breakdown in the second quarter, he said. The so-called net national saving rate, which is the sum of savings of individuals, businesses, and the state sector, also fell a record in the second quarter, returning to the negative zone for the first time since the global financial crisis. After the remaining fragility and initial decline, he said, there are 2 factors driving the dollar's sinister future. Without saving and wanting to grow, we run these current account deficits to borrow the plus savings, and this is always pulling the currencies down, Roach said. And the dollar is not exempt from this traditional adjustment. Roach also said new COVID-19 infections and higher death rates should be part of assessing the risk of aftershocks. As we enter the flu season, when death rates are unacceptably high and new infection rates are rising again, the risk of aftershocks is not something you can ignore, he said. So it's a tough combination, and I think the record of history shows that it's not a time to bet that this is different, unlike what sparkling markets do. No one is coming to save the global economy this time. During the financial crisis, 2 countries kept the global economy from cratering even further than it did: China and India. Unfortunately, this time around, in the economic crisis caused by the coronavirus pandemic, no country is coming to save us. India has been on lockdown for months, and China is still feeling the debt hangover from the credit binge it went on the skip the financial crisis. This gives us all the more reason for Washington to pass another coronavirus aid bill as soon as possible. The coronavirus depression will be much more worse than the last worldwide recession, because this time no country is strong enough to rescue the global economy. The story of the Great Recession goes like this. The US and Europe were crippled while working to clean up their devastated banking system. The global services sector suffered without its biggest player, the US consumer engine. But global economic growth didn't completely fall off a cliff because another countries kept money moving around the planet. Over in China, policymakers enacted a massive stimulus to skip over the recession entirely. The country's GDP grew 9.4% in 2009. India chugged along as if the crisis barely happened, with its GDP growing 7.9% in 2009. But this time there is no corner of the globe that has been left untouched by the pandemic or its effects. And so there is no country that can reasonably chug along and keep things from getting truly disastrous. Economists over the Institute of International Finance recently wrote in a recent note that it was the growth of these two countries that lifted the global economy, while the US economy was on its knees. That is why global GDP only fell to minus 0.4% in 2009. Conversely, without their help, the economists estimate that global GDP to fall to minus 3.8% this year. In April, I've recorded that even when the coronavirus was brought under control, we would live in a shrunken world, a world where human transactions would be limited. Since economic transactions are mostly human interactions, you can see the problem there. It was obvious that a slowdown was coming. How bad would depend on how we handled it. April was a simpler time. Back then, the assumption was that the US would bring its first wave to heel, and that a second wave may rear its ugly head in the fall. Of course, our first wave never ended. We have handled the coronavirus badly. The US employment rate is sitting at 8.3%. Testing is splotchy. Washington was able to get its act together to blunt the full force of the coronavirus onset. But now Democrats and Republicans are locked in an argument over whether or not the country needs another rescue package. It does. In fact, the whole world needs it.
Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.